Welcome, everybody. Steven Sitkowski here. Welcome to this week's edition of Market Insights. I trust all of you had a great Thanksgiving. It was awesome for me other than getting sick. So for a few days, like sick. And today, kind of back to normal. So a little bit of a gravelly throat, but I can handle that. Hope all of you are well, had much to be thankful for this season. Let's take a look at what's going on out there. Quick reminder, everything we do here is for educational purposes only and not intended as investment advice. So when you approach the market, this is the proper approach. You want to ask yourself, so what are the fundamental influences? What is impacting the market? We're going to talk about that. Look at the overall market strength or weakness. We'll pull that up for you. Go through the various sectors, see where there's strength. And then finally, the individual stocks themselves, those are the last considerations. But most people put those first. And the reason they do, they don't really get it because they just lack the training. So what's moving the markets? Well, we're riding a 4-week winning streak. This has been a fantastic month. It has been a fantastic month. Black Friday, spending up 7.5%. So where's the recession I keep hearing about? As long as people are spending money, there's not a recession, right? It's good for the economy, drives GDP. 70% of our economy are folks like us. It is official. We have entered the age of the Jetsons. Lilium gets EU approval for flying taxis. We live in amazing times. I just think about the things that my kids, grandkids, are going to experience. I mean, think about, those of you that are part of my generation, what we have seen, the internet, they used to call them cell phones. I don't know what they call them now. Smart devices. I mean, they've revolutionized the computer, revolutionized our world. Electric cars. We're driving around in giant golf carts. Pretty soon, it'll be electric taxis that fly. It's crazy. 10-year Treasury is kind of stuck right now. We're at 4.429. Keep it under 4.5. And oil is in the mid-70s, waiting for that to break out. We got a lot of news this week. A lot of it is Fed speak. They get their day in the sun. New home sales came out today. Those numbers were weaker than expected. Tomorrow, the consumer confidence number comes out. Wednesday, we get our GDP first revision. And the Fed beige book, State of the Economy, is released. Thursday, initial jobless claims. Personal income, personal spending, and the personal consumption expenditure index will be delivered. And on Friday, we have the ISM manufacturing, and the good chairman, Jerome Powell, will be taking the stage. So lots going on this week. Pay attention to the news. It could move the market. Last week's heat map, pretty strong. A lot of green, very little red. NVIDIA lost 2.41%. They have plenty to lose, as you'll see the year-to-date numbers, but a whole lot of green up here. Microsoft had a nice week. I continue to do covered calls on Microsoft. Year-to-date heat map. Lilly up 62%, Meta 181, Google 55, Amazon 76, Tesla 90, King of the hill, NVIDIA, 229%. Hopefully you were loaded up on these securities, whether it be stocks or bullish option trades on them. Either one could have made you a small fortune. And even though the market's been great, S&P is up 19%, NASDAQ up more than 30%, there are still people out there who've managed to lose money because they're just in the wrong stocks. So keep watching us. Market breadth last week, pretty solid. On the NYSE, 176 new 52-week highs, 58 new lows. On the NASDAQ, still had more new lows, 313, the new highs, 248. But things are moving in the right direction. Been quite the month. So S&P up 8%. Wow. Doesn't happen very often. We've had a big inflow into equities last couple of weeks. The biggest inflow since February of 2022. People are starting to believe, hey, market's going higher. All you got to do is look at a chart, which we'll do. Cash has been king for the 2020s. Thought this was pretty interesting. Look at all the money that went into cash. Next was equities, and way down here, treasuries. Retail investors are back to putting money into stocks, as you can see right here. Banks, as a sector, they've been trailing the pack. Financials have not done well and have not really enjoyed the advances of the overall market. Part of the problem, they're not lending, which is how they make their money. Awful. And then we should have plenty to look forward to. December's another good month, just like November. And January is another good month. So if you're in the right stocks, I think there's a chance to absolutely clean up the next couple of months, especially for those of you that understand something about options. These are the Fed probabilities. So kind of what the market has baked in. Fed's going to hold for the next 3 cycles. And then there's about a 50-50 chance of a rate cut in May. I don't see it. I think we're going to get a rate cut. My best guess would be September. And my thesis is based on the economy is doing too well, and the Fed does not want to take the chance of exacerbating inflation. That's just my opinion based on the data, such as I see. Let's take a look at the charts. See what's going on out there. So here is the S&P 500. So we had this V recovery right here. Went above the 50-day. 50-day is now sloping upwards slightly. Looks like we're kind of rolling over a bit. Look at the drop in volume. So could be running out of buyers right now? Yeah, I'm not sure I see a big catalyst in the market until we get the Fed announcement on December 13th. So things could languish a bit. How about big tech? Same kind of a deal. Broke above and then has just been kind of moving sideways. But after the big run-up we've had, moving sideways for a little bit is not a bad thing. It happens all the time. Markets never just go straight up in one direction. So, all right. Good being with you another week. Hope all of you have a blessed and prosperous week. And take care of yourself. Stay healthy. All right. Bye for now.